Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hope all of you had a very beautiful day of trading today. And in today's price action, guys, well, we continue to get some consolidation. We've been expecting this on the channel since last week after the elections when we started really clipping into this big trend line on the S&P. We know that the short-term conditions on the 1 hour and 4 hour charts were severely overbought, and we were just expecting a little bit of a pullback. And this week has offered pretty much just that, continuation of the pullback. Now, in today's news, we did have some comments from Federal Chair Jerome Powell in the late afternoon, which did accelerate today's sell-off a little bit. And we did have some numbers from producer inflation data coming in this morning, which also didn't really help the bulls on their journey towards recapturing these daily uptrends right away. So in today's video, guys, we're going to do a few things together. Number one, we're going to very briefly recap the comments by Jerome Powell, very briefly recapture the PPI numbers as well, and how they tie into yesterday's CPI numbers for the consumer. Thereafter, I have one earnings results prepared for you guys, and that is going to be Disney, which came in with their earnings before the bell this morning, and we're up about 6-7% on the day. Fantastic earnings from Disney. So we'll take a look at how that company is doing and how are they doing, especially in terms of their recovery story. And thereafter, guys, we're going to get into some juicy technical analysis of our major stock market indexes, followed by our big tech names. I'll be throwing in a few names here and there as well in between. And that's pretty much it. No portfolio review for today. We're going to save that for tomorrow when we do the week portfolio recap as a whole. It's been a very good week of trading for myself and our Discord members too, and hopefully you guys have been making some good profits as well. So without further ado, guys, let's jump right into it, and I will try moving forward to keep these videos as short as possible, so please let me know if you appreciate the shortened content. Now, moving into it, guys. So the SPY down about 0.64%, QQQ down about 0.69%, and we did have a lack of rotation today. Only semiconductors proving to be a fairly bright point in the market. In terms of big tech, fairly mixed. Microsoft, Apple, and NVIDIA were to the upside. A lot of software as a service companies were down. Tesla also with a big down day after Donald Trump's new administration plans to probably cut the EV credits in terms of $7,500 per share. We'll talk a bit more about that when we cover Tesla later on in the video. Defensives down a little bit, financials as well. Fairly weak on the day. Healthcare, another bad day for healthcare, breaching a major level. We'll cover that in a few minutes as well. And the bottom half of the market, guys, not performing too well either. Industrials, especially your defense names, coming down a lot because once again, having to do with some of Donald Trump's policies, wanting to end the war. So concerns about military budget spending moving forward in the future. That's what brought them down. All in all, where do we stand on the one-day relative, guys? Well, you will see that it's not that pretty, right? Only energy of all things was up today. Everything else to the downside, led by healthcare, industrials, and consumer cyclicals. On the 1 week relative, well, it shows that we've now been at about 4 days of pullback, right? All of everything pretty much teetering towards the red. Only financials and consumer defensives and energy able to etch out a little bit of gains. But this week has been all about consolidation. But good thing that I prepared that for you guys on the channel leading into the week. So hopefully you were able to position accordingly. Now, in terms of what happened in today's price action, guys, well, number one, we have to talk briefly about the producer inflation numbers. They came in a little bit hotter than expected. On core was supposed to be 3. They came in at 3.1. Now, last month was 2.9. In terms of year-over-year comparisons, non-core, 2.4 versus the 2.3 expected. So hotter than expected and hotter than last month at 1.9. This is the exact same thing that happened with CPI yesterday. We came in slightly above last month and slightly, ever so slightly hotter than expected, but I wouldn't say it's a major red flag, guys. If anything, it points to the fact that the Fed can be fairly, fairly decisive with its changes in the interest rate policy. They can adjust if needed, right? Keep rates higher for longer if they want to, if they see inflation's a problem or not. But so far, we heard from Jerome Powell again today, and he once again reiterated the fact that these inflation numbers, because he did see them this morning and he spoke in the afternoon, are not a concern to him. He's been talking about the bumpy path back down to 2%, and that's kind of exactly what we've been getting. So let's move into the Jerome Powell statement now. Powell says the Fed doesn't need to be in a hurry to reduce the interest rates. Federal Chair Jerome Powell said Thursday that strong U.S. economic growth will allow policymakers to take their time in deciding how far and how fast to lower the interest rates. the economy is not sending any signals that we need to be in a hurry to lower rates. So obviously, guys, the market didn't really like that because that means that we're kind of pricing out potentially a December rate cuts. You remember the rate cuts odds yesterday were at 82.5%, traders largely being unfazed by yesterday's CPI report. But now with Jerome Powell's comments in the afternoon being a little bit more hawkish around those rate cuts, right? Now, standing at about 60.6%. So still has the majority in terms of the expectation, but you can see these numbers will wildly fluctuate here, guys, over the next few weeks as we move into those meetings. If all you need to look at, guys, in terms of the inflation numbers, right? We'll get into that in a little bit. I'll tell you what Jerome Powell said today, right? In an upbeat assessment of current conditions, the central bank leader called domestic growth by far the best of any major economy in the world. And he is right. The US economy has been outpacing the rest of the world so far this year. Inflation is running much closer to our 2% longer run goal, but it is not there yet. We are committed to finishing the job, said Powell, who noted that getting there could be on a sometimes bumpy path. So that's exactly what we saw yesterday with CPI and today with PPI, the slightly bumpy path. The moral of the story is the trend in inflation is down. The Fed still thinks it's under control, and the majority of Wall Street analysts as well and economists all think that inflation is under control, but everybody is reiterating the slightly bumpy path. Now, could Trump's tariffs down the line potentially induce some inflation? Well, that is to be seen because we still don't have the final stance on those tariffs, how much they could be or which countries they can affect, which products they will affect either. So that's more down the line, thinking about February and March, right? But for now, at least for maybe the next month, 2 months, 3 months, no major red flags in terms of the inflation camp. So that's pretty much everything for that. Now let's dive right into our Disney earnings, and then we'll get into some technical analysis. So Disney, guys, Disney bumping up about 6% today. Very good day for the stock, especially after bottoming last quarter around 85. If you remember on the channel, this is where I bought my Disney stock, which I sold yesterday prior to the earnings. I only had a small position in the shares, guys, but I did keep the leap calls, and the leap calls are up very nicely today, guys. We're up almost a 3x on these leap calls. So they've been performing well, got a lot of time on these, so I will hold them because I did like what they said in their earnings report today. I will remind you before we get into Disney, guys, what was the problem with Disney? Why did they get crushed this bad? There was 3 problems with the company, and before I bought in last quarter, I wanted to see that these 3 problems were being addressed and possibly being solved. Number 1 was streaming service profitability. This was supposed to be the saving grace for Disney, but they were unable to turn a profit in their streaming business over the last 3-4 years. That finally changed now for the last 3 quarters, and this quarter, once again, now operating at a net profit. Number 2 was franchise fatigue with their movie business. Disney was doing too many sequels, right? Especially in terms of the Marvel movies, and especially as well in terms of big franchises such as Star Wars, really milking the franchises for what they were, and in such being criticized for lack of originality. So Disney got back to the drawing board this year, and happy to say that their blockbuster hits this year were very, very successful. So they've been turning that around this week too, trying to get more original with their content, more original with their movies, and it seems to be working well. That's problem number 2. Problem number 3 was that they were running out of pricing power in their parks and struggling to attract clients, either through pricing or new features. That was addressed last quarter as well. They're now spending heavily in capital expenditures to remodernize their parks and their cruise line experiences to re-attract customers. So they can't really have any much wiggle room with the prices because prices are maxed, but at least they're going to provide a better experience to get that returning clientele. So all 3 problems have now been addressed, and it makes me happy to finally be holding some Disney positions. Let's move into the article, shall we? So Disney stock surges on streaming growth and guidance, looking very good. Look at the numbers real quick, guys. In terms of the beats on EPS and beat on revenue, healthy beat on bottom line EPS, 3%, and a nice little edge of a beat on 3.36 on the revenue. Let's get into it. So we're going to tackle this sector by sector, all 3 problems: streaming, movie business, and parks. Let's get into it. Streaming business's growth and profitability combined with a blockbuster summer at the box office and further investments in the company's theme park business comes during a time of turmoil across the media industry. Talking about turmoil, guys, we'll get into this chart too. This is going to be the US media companies' performance since 2022. We'll get into that, but there's a little underlying problem there. Now, during Disney's fiscal 2025, the company expects high single-digit adjusted EPS growth compared with the prior fiscal year, where they were kind of struggling and often negative. The company expects double-digit adjusted EPS growth in both 2026 and 2027. Disney never usually gives guidance for more than a year, so the fact that they gave guidance for the next 3 years shows that they're very confident in the direction of their business moving forward. I like to see that. You don't usually see that from management unless they are very confident. If you think of the big initiatives that we have invested, putting creativity back at the center of the company, and on top of that, we said we wanted to improve profitability, and we are clearly doing that in a substantive way. Looking very good indeed. Disney's net income increased to $460 million, which is about 2% net margins. Now, I'll remind you what happened at Disney, of course, on the onslaught of the pandemic, right? Obviously, guys, Disney's shares absolutely fell through the floor because a lot of their business, of course, is the theme park related business. And you couldn't really do that from COVID. But it's been a very slow and progressive recovery story. So now this past quarter, coming in under last one at about 2% net margins, but they are incrementally doing better quarter over quarter, period over period. Operating margins was a highlight of this quarter, and I'll highlight that in just a bit. So Disney's overall revenue was up 6%. That was good. Revenue for the entertainment segment, which includes TV networks, direct-to-consumer streaming, Disney Plus, and films, increased 14%. That's what everybody was looking for, and Wall Street did like it. So streaming strides. Let's get into it. 5 years since Disney Plus launched, the streaming service has stemmed annual losses of $4 billion as recently as 2022 and is now profitable. Finally, this is what I've been waiting for. They reported operating income of $321 million, which is Disney Plus, Hulu, and ESPN. The company executives said in the release they are confident streaming will be a significant growth area for Disney. They had been saying that since they launched it in 2019, guys, and it wasn't going so well, but now I can actually get behind this statement. Disney Plus core subscribers grew by 4.4 million or 4%. So getting some nice growth. We saw that in Netflix also with their quarterly earnings about a month ago at this time. So nice to see Disney is also part of that trend. And what does this trend show, guys? It shows that people are moving away from regular TV streaming services, just regular cable network TV, right? And moving towards on-device streaming, such as Amazon, Apple TV, Disney Plus, of course, and obviously the market leader, Netflix. Look at your performance from everybody else. Comcast, Paramount, Warner Brothers, right? Even Disney has been brought down with this pack. Everybody is severely underperforming the indexes. If you want me to move my big head over, right, there you go. There it is, right? So everybody underperforming the S&P. The worst of the bunch are Paramount and Warner Brothers Discovery. So let's continue into the article, shall we? Now, in terms of company executives said more than half of new US Disney Plus subscribers are choosing the cheaper ad-supported tier, adding that this bodes well for the future. Media companies have been focused on advertising as a measure to drive profitability in the streaming business. Now, we've touched upon this with Netflix, right? They introduced the lower cost ad tier. It's great for client retention and great for just reducing prices, making the service more affordable, even though you get hit with the ads. Disney streaming entertainment ad revenue was up 14%. So nice for them to be monetizing that. That is a high profitability driver for the company. Same thing for Netflix. Meanwhile, the company's traditional TV networks business continued to decline in the most recent quarter as consumers leave pay TV bundles behind in favor of streaming. Revenue for the networks was down 6%. Profit for the segment sank 38%. So at least Disney has the streaming service. Customers are pivoting from legacy TV over to streaming. So you can obviously see where one aspect of the business is lagging and where the other one is picking up. Now, Disney's Experience, the theme parks update. So here we go. Disney's Experiences segment, which includes the theme parks as well as consumer products, saw revenue grow 1%. Not all that bad, but at least they're not declining. Recently, theme parks have experienced a slowdown, particularly in the US, following the post-COVID surge in attendance. There was a lot of pent-up demand. Companies have warned the lull will carry over into future quarters. Even Comcast, with their Universal brand of theme parks, said the same thing. Disney's domestic parks operating income rose 5%, helped by higher guest spending at the parks and cruise lines. International, not so good though, fell 32% due to a decline in attendance and guest spending, as well as increased costs. So locally, doing good in the US, but internationally, not doing so well. Once again, goes back to what Jerome Powell just said, right? The US economy is far outpacing the rest of the world. The rest of the world is still in a little bit of an economic lull. Several other countries are right now in recessions, right? Now, Disney's experience segment is expected to see 6 to 8% profit growth in the coming fiscal year compared with the prior year. That's very strong, guys. Very, very strong for the theme parks and cruises. Disney noted the fiscal first quarter will see a $130 million hit due to the impact of the hurricanes Helene and Milton, as well as $90 million from the Disney Cruise Line pre-launch costs. As I was telling you guys, they're spending a lot of money on those cruises to get them up to par and modernized and the best in the business. So that is pretty much where we stand. So everything, guys, looking very good for Disney. Not that bad at all. And I forgot to bring up the movie business, right? So Inside Out 2 did very good. Their most profitable ones this past quarter have been Deadpool and Wolverine, highest grossing R-rated film of all time, surpassing Joker, which was crazy, right? Inside Out 2, highest grossing animated movie of all time, surpassing Frozen by themselves as well. So they've been having a good time. Yes, you can argue that Inside Out 2 is a sequel, but it appears as though the creativity, at least in terms of Deadpool and Wolverine, is back. You can argue that that's somewhat of a sequel as well, but if you watch the movie, they kind of play on that as well, right? It's kind of a inside joke. Disney's writers are kind of making an inside joke at the company themselves. That's why I kind of like that movie. So they recognize there's a problem and they're working towards it. So across all three things, all three concerns, guys, theme parks, they're renovating them, they're modernizing them with the cruise lines as well, and they're going for operating profit, and they're navigating a very tough macroeconomic landscape internationally. So for that, I commend them, cutting costs where they can there as well. Number two, the streaming business. Well, it's now profitable and growing, so that problem has been alleviated. And problem number three is obviously the movie franchise fatigue. They've now reignited themselves with a lot of box office hits, but the job's not done. They still need to do a lot more in terms of original content. So all in all, I was happy and pleased with Disney's reports. Let's get into some of the valuation, guys, and I'll let you know whether or not I want to buy more of the stock at this current time or whether or not it's a pause for me. So revenue growth of 4.8% per year, EPS growth of 13.5% per year, and Disney's coming back. Even though their profitability is not the best, they got hit very, very hard during COVID. I mean, look at this EPS expansion, right? We're coming back. We're not truly back to 2018, 2019 levels, but it's coming back streamlined and consistent. Revenue, although revenue growth rates are not what they were a few years ago, they are still improving on all lines of the business. So I like to see that as a whole, guys. Not that bad. The one little problem with Disney, guys, is the fact that if we take a look at their balance sheet, you'll see that the debt profile is not so attractive. They do have some cash. They do generate a decent amount of free cash flow, but they've accumulated a ton of debt since COVID. It's nice that you can see they've been paying that debt down aggressively, but still not the best balance sheet in my humble opinion. That's the one red flag about the business, truly. Now, 2024 P at 109 is about a 21.4. That's not too bad. When we take this divided by their EPS growth rate, we get a peg of 1.55. Not the worst, right? Anything under 1 is good, over 2 is high, 1.55 is right in the middle, right? Lukewarm, let's call it, and a free cash flow yield of 4.4%. This is good. Usually I look between 2.5% to 5%, the higher the better. At 4.4, it still goes to show, guys, that the shares are still a little bit cheap. Now, obviously, they're not as cheap as when I got them down here at 85, but I wouldn't say that Disney is a terrible deal, right? The average price target is right where we're at. So if this is a play for a longer term recovery story, then yes, but keep in mind, it may take some time, right? If it's for a trade, well, I would be highly considering possibly waiting. If we get some form of an earnings give back and a gap fill, and we can maybe find some more shares around the $100 mark, that will look pretty good, guys, just in terms of continuing the weekly uptrend, right? You'd just be looking for the retest down here and possibly further run. So anywhere around 100 would be, where I'd be willing to possibly reconsider adding to this position. My leap call that I have, as you saw right there, I'll be keeping this one, guys. I like the direction that Disney is going. I'll probably be keeping it at least for another quarter or two into 2025. And that is my analysis on Disney. Obviously, the massive buy opportunity, if the markets truly fall off a cliff or Disney falls off a cliff, is down here, guys. $90 to $80, in my opinion, for Disney's recovery story is a fairly easy bet. Decent risk to reward down there. So that's everything I had for that one, guys. Hopefully you appreciated that. Now let's jump right into our indexes, and we'll do these a little bit quickly because not much has changed in the last few days of trading. Still underway for daily consolidation. We know that the bulls control the weekly time frames. It's not even a question right now. We're still just looking for a weekly higher low for possible further trend continuation. That being said, daily consolidation simply continues. Coming into support very soon, though, 580, 590 is your 12 EMA. We could come down a little bit deeper though. 585 to 580 would be a decent little retest area of the prior resistance range. So all in all, SPY bulls not looking too bad. It's just we had no rotation to speak of whatsoever today. So I do still believe that maybe the whole week might just be for consolidation into tomorrow. We may set a red weekly candle and maybe early next week as well, start to tap into the support zone. And thereafter, we might get a little bit of lift and get into that favorable end of November seasonality and December favorable seasonality too. Moving into the Qs exact same analysis, right? They did a good job of holding up this hourly support level, but now unfortunately we have flushed it. Hourly downtrend is underway, so you know daily consolidation is continuing at this point. A lot of space for the bulls though at this point, anything above 43, looking for the daily higher low for possible further trend continuation. So if you pull back a little bit more, tons of space. Support still stands at 500 down to about 495. Why? Well, we have a bullish leaning bias, guys. The bulls control the higher time frames, so any pullbacks, in my opinion, could be a decent little buying opportunity to go shopping for some of your favorite tech stocks that maybe have been gotten beat down over the last 4 or 5 days of trading. Moving into XLF right now. XLF holding up better than most, have to admit, right? They haven't really moved in the last 4 days of trading. Still in a very nice daily uptrend. However, keep an eye on these lows right here, guys. 48.70. Flush those. Unfortunately, you lose the daily uptrend, set up the door for the bears to do the daily downtrend flush. And then at that point, you may end up like the SPY and the QQQs, just in a little bit of weekly consolidation, right? So much space, guys. Anything above 46, looking for the daily weekly higher low for further trend continuation. So that's if they give up the daily, guys. Just expect consolidation. 48 down to about 47 should be the area that the bulls will play some decent defense. And the one that I'm looking into, guys, is going to be Berkshire. I think Berkshire is looking quite good for a little bit of a bull flag. I mean, it looks like XLF, right? It looks exactly like XLF. If you remove the fact that XLF is at all-time highs, look at the candle structure the last 2 weeks, right? It is almost identical. So Berkshire, I like it, but we have to be honest, right? If XLF comes down, don't expect Berkshire to just go up on its own. And speaking of Berkshire, by the way, they released the 13F today. What did Warren Buffett buy? What did he sell? Well, he sold out of his Ulta Beauty position. And what did he buy? Well, he bought Domino's Pizza. That was the big change last quarter. I've been calling this one out a few times on the channel, as a matter of fact, as a very good deal down here. And it seems as though Warren Buffett agreed with me, right? So I front ran Berkshire. Once again, it's happened a few times this year. So Domino's Pizza up a very healthy 7.58%. So for those of you that listened and wanted to position down there, you must be up nicely. So congratulations to you guys for that. Moving on to XLV Healthcare right now. So Healthcare down 1.57, flushing a big level. They had the daily uptrend. We were looking for the higher lows for the continuation, but we knew that the bulls had a lot of work to do. Why? Because they never had the weekly uptrend. Weekly downtrend now persisting, and now we've flushed below the level that we could not lose, flushing below the 50 EMA on the weekly, which we have not lost since the rally in November. So November 2023. So very big flush. So what we're looking out for now, guys, is all on the monthly. Anything at this point above 138. Need to protect this, guys. I would not like to see them come much below the 26 EMA. We know that healthcare can sometimes lose the uptrends without so much losing the uptrends. Sometimes just goes into a sideways consolidation. So that could be a factor at play right there, but you do not want to lose the monthly higher low. So we'll keep our eyes peeled on healthcare. So far, no big real names that I want to look at in terms of positioning for healthcare just yet. The sector is really out of favor. AbbVie is possibly coming into one of my levels down here, 165 to 150 for the monthly retest. I mean, UNH just blasted off, no trade there, but I really liked it, 550 down to 525. We'll see if they give us a re-entry. And NVO has just been really out of favor for the last, let's call it 3 months at this point, even more than that, right? Tremendous 2 years worth of rally and just completely out of favor. If they do come down under 100 down to 90, I'm probably going to go a little bit heavier on my positioning for NVO, because I think they're kind of getting, the whole healthcare sector right now is just getting somewhat unfavorable treatment. Moving into semiconductors right now. So semiconductors, no change on the day, but still looking very weak, guys. They're just not cooperating at all. I'll remind you, we showed this chart yesterday. If we pull it back onto a 1 month relative, you'll see that other than NVIDIA, look at this list right there to the right of me or to the left, depending on how you're looking at the screen anyways. So you'll see on this list, right, other than NVIDIA and Intel, is there anything other than TXN who had good earnings? Is there anything else that's green? absolutely nothing else is green right now, guys. The only one that's not on this list is TSM. TSM is green, but for the most part, everybody else is red. And I'll remind you why, guys. It's very, very logical, right? All of them, pretty much, it's a cyclical business. For the most part, they are all cyclical companies. I'll go through a few just so you guys understand what I mean, right? 2021, 22, big inventory ramp, and thereafter demand falls off. PC sales fall off, electronic sales fall off, car sales fall off. Semiconductors are used in all of those things. So you can see net drop off in EPS, net drop off in revenue, but where are they all coming back? 2025 onwards. A lot of companies have this exact same curve, right? If you take a look at LRCX, exact same curve. Take a look at ASML, right? Arguably exactly the same curve. 2024 transition year and then explode into 2025, right? Take a look at one that just reported earnings today, as a matter of fact, and you will see similar patterns, right? Not that much expansion in 24, roughly flat versus the prior years. And then we get the expansion in 2025 onwards. The list goes on and on and on, guys. I can go through a lot of these and you'll see they have the exact same profiles. It is a cyclical business. It ebbs and flows with the demand of things that have those electronic components in them. So we cannot blame them. The companies have been guiding for this for at least the past 2 quarters. That end of 2024 would be a little bit weak, but that demand forecasts have been revised to the upside for Q1 2025, and 2025 as a whole should be a good year. So as of right now, still muted as a whole sector, trapped between 2 levels, 250 up to about 260 on the highs, and down here 238 to 240. So the daily is a little bit messy right now. They're trying to muster together some defense to go for the daily uptrend rally, but it's very, very mixed, right? Look at the weekly, very mixed price action. We are in a somewhat of a weekly uptrend, but if you lose this level right now, guys, the best chance you have is maintaining somewhat of a tightening range. So not looking the best, not looking the worst on semiconductors, definitely not close to being broken out of this level just yet. Maybe need to wait to NVIDIA earnings next week to give us that extra push that the bulls possibly need. In terms of how I'm playing it, I'm writing my puts on my favorite companies, NVIDIA, TSM, and stuff like that, well below the market, benefiting from this volatility. And I also started a position in SOXL. I'm taking a slight bullish position in SOXL, as a matter of fact, starting on some calls. May 26th, $25 in the money calls, slightly underwater on them now, but I will add to the position in the event semiconductors get a little bit weak. I only play these 3 times leverage ETFs, guys, when we've been range bound on the underlying for a very long time, or it's been overall weak. So I do think this is a decent time to make some of those possible leveraged bets, but not financial advice, guys. Leverage bets are extremely risky. Moving on to the IWM Russell. So growth stocks, we know, as I was saying after the boom last week, I was saying, be very careful, guys. Do not get trapped. Please do not get trapped at 84-hour RSIs, at RSIs in the 1 hour that we're pushing 90. Do not get trapped. Wait for the pullback. So hopefully you guys were cautious in playing this one as well. But one thing's for sure, the clearest time frame here is the weekly, right? Gorgeous weekly uptrend right now. Smashed a key level and closed the weekly candle beyond. They smashed the 2020 and 2021 all-time high resistance range. It's going to be very tough for the bears to fully recapture this back. So now we are entering in to the buy zone, in my humble opinion. If we're going for the breakout, retest, and possibly run, the trade is upon us right now. And as a matter of fact, I did start a little bit of a position today on IWM. You can see the September 30th, 2025. So you can call them leaps. They're not quite leaps, but they are. 220 calls in the money for about 29.31. We're slightly down on those. I started them at the end of the day, and I will average into them if we make it back to 225. But all in all, guys, the weekly uptrend is our friend right now. The monthly's not close to being closed. We won't look at it. Just looking for a daily higher low for further trend continuation. So I'll be watching this one closely for a possible reversal. Hourly is already starting to get a little bit oversold. So we'll see, can the bulls get it done? Or might we have one more day of consolidation, 1 or 2 more days. Moving on to the Dow Jones now. Dow Jones also following the same path as the rest of the markets, right? Beautiful daily push up, looking for a daily higher low for possible further trend continuation. The big area of support down below is 43,000 down to about 42.5. Even if you get the daily downtrend here, guys, right, wouldn't matter too much because who's in control here? The bulls control the full weekly time frame. We're just looking for a weekly higher low for further trend continuation. So gonna look good. The 12 EMA is also sitting right down there. So if you kind of line up in the low 43s, could be a decent opportunity if you're looking to play something like the Dow Jones. Now let's move in a little bit further here. Let's tackle Bitcoin because Bitcoin is down today, losing some short-term levels, but not all. So we were keeping an eye on the hourly trend. We were saying that if they lose the hourly trend and lose these short-term moving averages, in a considerable way, you can obviously something here is different than when we first launched. We had never lost the 12, the 26, and the 50. And now, as a matter of fact, these short terms are crossing below the 50. Now, it's not to say that Bitcoin can't just pull out a God candle out of nowhere tomorrow and surprise everybody, but the chances do favor right now the bears for a little bit more follow through of this hourly downtrend. So you know that daily consolidation is upon us. And at this point, looking for a higher low, anything above 67,000, looking for a daily higher low for further trend continuation. And I removed all these things on the chart just to give you guys some perspective, but the support area is all the way down there. So the bulls have a ton of space to work with, guys. Even if we set up a daily downtrend and go down for the next 2 weeks, is it that bad? No, not at all, guys. We have the weekly uptrend in our favor as well. Beautiful weekly uptrend, looking for a weekly higher low for further trend continuation. So a little bit of consolidation after the blow off tops, after the euphoria. You guys know how it works. They bull trap you at the top and then they kind of run away, get you scared. You close down here and then they put in another leg, right? So do not get trapped. Don't fumble the bag on Bitcoin. If you're long-term holding, I don't see any red flags at the current time. Moving on to our big tech names now, shall we? So, and the rest of crypto, guys, Bitcoin dominance is through the roof. The reason why I don't go through the rest of crypto right now is because until this chart starts going down, you will not have altcoins leading any form of rally. So whatever happens in Bitcoin, the rest of the market will just follow. Simple, very simple, right? So that's why I don't go through the rest of the list in an exhaustive fashion. Moving on to Apple, if I can catch my breath, give me a second. Moving into Apple, 1.38% to the upside. Not that bad of a day, guys, but Apple's really not doing much. Battling with overhead resistance, 230 is going to be the mark. Down to about 225, trying to go for the daily uptrend, guys. But I mean, truly, we're trapped between two levels on the weekly, right? This resistance and the support below us, which is 220 to 215. So until I see a considerable break of either the highs or the low areas, I would say that we're largely going to be range bound in this 15-point range. So the best way to play a range, in my humble opinion, is always to be writing some short puts if Apple is a high conviction stock for you. And if you like writing short puts, of course, 219 down to 215 should be the area in which we would be interested in writing some short puts. But as of right now, guys, no clear direction. And I've said it before, because of the valuation concerns with Apple right now, I'm not saying they're going anywhere as a company, right? But it's very slow revenue growth, very high valuation for what it is, somewhat low free cash flow as well. So that's why if I'm looking to add more shares to my long-term position, I need a better deal. I need at least 205 down to 200. I'm not touching up here. I'm not selling my long-term shares, but I'm also not buying more up here. And I'm very hesitant to trade this one because I also don't believe that unless the SPY and QQQ put in a heck of a rally, I don't believe Apple has it in the tank or has the catalyst for just on its own to do something like this, like Netflix and Meta have just done. So hopefully that explains it on Apple and why I'm kind of hesitant to position right now. Moving into AMD. So AMD, unfortunately, guys, continues losing the levels. Now, you know, I used to play AMD a lot back here and back here, but their earnings kind of just reiterated one fact, that we were expecting a lot of bullish news out of AMD and how they're going to catch up to NVIDIA. And now, unfortunately, it doesn't appear that they'll be able to grasp more than maybe 15% of total market share, which is still very, very low, even though they will be expanding their revenue and EPS very aggressively over the next year, as we can see down here, as I've been telling you guys, right? This is the ramp cycle for AMD. So eventually, I do believe the stock price will come up, but it's maybe going to be underwhelming in relation to other market leaders such as NVIDIA, such as TSMC at what they do, right? Now, obviously, AMD is not a direct competitor to TSMC, but you guys know what I mean. In the industry of semiconductors, there's a few standout names that have been outperforming the rest, and I'm sticking with those names and just not playing the rest for now until the whole sector comes back in favor. That being said, daily downtrend is clear as day right now on AMD, so we are challenging the lower areas right now. You know, all the way down to roughly 127 is the last area of support. The weekly also giving back all of the momentum, guys, so now it's going to be very, very tough for the bulls to just purely V-shape this. Do they have a chance? There's always a chance of everything in the markets, guys, but at this point, they're not favored. If anything, you may just see a slow two-step recovery process. So we'll keep an eye on this one. If you want to know when the daily chart is bottomed out, just look at the hourly time frame. As long as there's no hourly uptrend, you cannot say the daily lows are in, and you cannot look for a measurable size of a move to then recapture the daily. So the bulls need to start everything from scratch, guys. They need to get the daily uptrend back, then they need to get the weekly momentum back, and then we need to clear the 155 to 160. As of right now, not a bad idea to be playing short puts down here in the low to mid 120s, but, you know, on the rocks for now on AMD. So very unfortunate for the company. I'm not building any major long positions in this one. As I said right now, I'm more focused on the industry as a whole. SOXL, NVIDIA, and TSM are my three go-to plays right now, rather than trying to pick any of these individual beaten down semiconductor names, such as, AMD, such as the one that I apparently can't type out right now, which is LRCX, the other one, which is ASML, right? All very good companies. It's just, I want to play the uptrends. I want to play the momentum. I don't want to be trying to pick the bottoms on things that are out of favor right now. There's nothing wrong with that. It's just there's so much money to be made right now in the market and other names that are hot right now that I figure that I shouldn't be parking any money in things that are moving very slowly. Hopefully that makes sense. Moving on to Amazon right now, 1.22% to the downside. Amazon's still looking great despite their sell-off. Now, today was a day where big tech, one after the other, Department of Justice this, European Commission this, investigation, probe, lawsuits, everything in the kitchen sink. And I keep telling you guys, right? This is what happens when you invest in monopolistic companies. These are the headlines that you're going to get, but at least you're not investing in another company that has competition risk, right? So it's always a trade-off in investing, right? Where are the headlines going to come from? Is it from your competitors disrupting your business? That's worst case scenario, right? Think of Adobe, think of Lululemon. That's worst case scenario. If the news comes from Department of Justice probes, European lawsuits, fine, $1 billion slap on the wrist, $500 million slap on the wrist, I'm fine with that. I would much prefer that. Today was one of those days where everybody, Amazon at the end of the day were being investigated, Google was being investigated, Meta got hit with a $580 million fine from the European Union, Microsoft as well, probed everybody, guys. But it is what it is. That's what happens when you invest in these style of companies, right? Amazon, that being said, daily uptrend clear as day, looking for the daily higher low, anything pretty much above 205, looking for the daily higher low. And if we flush and roll over to the daily downtrend, just understand what we're looking for here, guys. The weekly bulls are in full control, looking for a weekly higher low for further trend continuation. At this point in time, I am targeting the 200 to 195 retest. 12 EMA is going to be right there. It's the prior all-time highs, would be a great location for the bulls. Take a little bit of a breather and then get us back higher into Q4, which is Amazon's best quarter. Love this company. Going to be playing this company aggressively into 2025 because they did something this year that they've never done before, which is they are more profitable than ever. They are now finally putting the shareholders first, most free cash flow ever, best net margins ever, focusing on bottom line income, guys. Watch out. Amazon's going to become a cash pile monster, in my opinion. Moving into Google. Google down 1.74%. Because, well, look at the headline right down here. The Consumer Financial Protection Bureau is seeking to place Alphabet under federal supervision. Yeah. We hear about this stuff all the time, right? Every single time they do this. They did this to Visa. I told everybody and myself to buy Visa down here, after the most recent Department of Justice probe. And every single time it's a buy. This reminds me of Apple all the way back here when they were at 170 and they were getting all of this. For those of you that are veterans on the channel, you may remember this list right here. All of the temporary issues plaguing Apple. And the first two was the EU lawsuit, the DOJ lawsuit, tons of different things, right? So always happens with these companies. And yet year over year, they get these lawsuits once, twice, 3, 4 times every single year, guys. Since 2016, I've been following these companies. It happens every single year, and yet they continue to push forward. So I think that every single one of these is just a buying opportunity, and Google is no different. Daily uptrend clear as day right now, looking for the daily higher low for a possible daily trend continuation. Why? Because the bulls are in full control of the weekly as well, looking for the weekly higher low for further trend continuation. And here we are, weekly MACD is crossing. And once again, here we are too in this location right there. 176 down to about 170 is that support range. And I benefited from this little bit of a sell-off today to right. The 172.5 puts on Google for next Friday got 84 cents. Didn't get the low of the day. I actually did these before we even got the headline. I was down here. I was happy. We wrote them. We picked the bottom. We were up. And then they hit us with the headline. So I was like, okay, well, anyways, give me the shares at 172, guys. I don't care at this point. I'm buying more Google. Give me the shares down there if you want to. No problem at all. I know that the weekly bulls are in full control and that we're probably going to continue this uptrend because this stock is very cheap. In my opinion, it's undervalued. Fair value should be over 200. And most of the analysts do agree with me as well. Moving on to Meta right now. So Meta down about 0.49%. Not that bad of a day for Meta. Just really sideways consolidation. No clearly defined trend. But what the bulls are trying to do is we're trying to set up the daily higher lows to go for the daily uptrend break. And that break would be 600 psychological. You can see it's been a very contested area for the bulls. We'll see if they can do it over the next few days. One thing's for sure though, if they keep rolling over to the downside, just understand what we're trying to do. Setting up for further weekly consolidation. If we come back here, guys, to retest 535, 540, I've said it a lot on the channel, I will be a buyer looking for the monthly breakout retest of the resistance range and possibly run, usually a very high probability trade. So if you retest that location on Meta, it could be good to roll. Moving on to Microsoft. Microsoft also putting in a decent day despite them as well, getting hit with some allegations for a probe. I don't know if I can find the news here. Here you go. FTC plans to investigate Microsoft's cloud business. Another one of those, and yet Microsoft dropped heavily on that news. You can see this candle right here. And shareholders said, yeah, you know what? These headlines are getting a little bit old and we don't care. So now moving, daily uptrend is in motion, clear as day. Overhead resistance though, 433 down to about 423. You can see it's been acting up for Microsoft a lot over the past year. Still like the stock a lot though, guys. Built up a decent leap position there. Tons of call debit spreads, and now they're all mostly profitable to say the least. And it's looking quite good for possible weekly trend expansion, but I'd be lying in saying if we've accomplished anything. To accomplish big things, need to break and close a weekly candle above 435. Only when and if they do that, guys, will we have the confirmed weekly uptrend back. So far looking so good, and if ever we revisit this lower range, guys, 410 down to 400, I will be buying a lot more Microsoft. I think it's a great buying opportunity down there. Moving into Netflix now. Netflix just, wow, continues the outperformance, right? Netflix is the new NVIDIA or something like that, I assume. Overhead resistance has to be psychological, 850 and then 900. Looking fantastic, but daily overbought conditions. And sometimes Netflix doesn't last there too long, so keep an eye on the hourly trend. This is why it's so important, guys. When you want to know when a trend is lost, watch the guide time frame. On the hourly time frame, the 12 EMA is your guide, and the hourly uptrend price action, higher highs, higher lows, is your guide as well. Lose the hourly uptrend and lose the 12 EMA in a significant fashion, you know daily consolidation is likely underway for at least probably more than one day, right? That'll be your pullback. Once we get the pullback, look where we're going to go to. In my opinion, 796 all the way about 800 could be a decent little pullback area. Tap the 12 EMA, could be good for the future daily rally. And even if we lose the daily uptrend, guys, and get the daily downtrend flush, is it that big of a deal? No. Why? Who's in control here? Weekly bulls are absolutely in full control of this chart. We'll just be looking for a weekly higher low for possible further trend continuation. So I'm not buying more Netflix up here. It's very nicely trending right now. I'd like to see more of a discount, but I'm definitely not selling any of my long-term shares. I am just holding. Moving into NVIDIA right now. So NVIDIA has earnings next Wednesday. So normal that they're kind of being sidelined, especially when the rest of their industry is just not cooperating, right? NVIDIA must be getting tired. It's like I feel like you're playing basketball, right? You have an all-star player, which is NVIDIA, and the rest of the team is doing nothing. You're scoring 40, 50, 60 points a game, and the rest of your team is doing absolutely nothing, and you're losing games, even despite your star performance. So very, it sucks for NVIDIA at this point in time, but such is life for one of the best companies in the world, right? Easy problem to have is when your competition can't keep up with you, right? So daily uptrend is looking quite good. It is a daily bull flag right now, accumulating above the most recent range of resistance. However, if we do break down, it would be considered a daily downtrend. Any break of 143.50, daily downtrend would be official at that point in time, and we just be looking for a little bit of weekly consolidation. The bulls are in full control right now. Weekly higher lows are set. So at this point, anything above 132 should just be a decent little dip buying opportunity for the bulls. But keep in mind, positioning before earnings, guys, a little bit risky in my opinion, even though, the big tech hyperscalers, they basically telegraphed the pass on these earnings. They said that the earnings will be, all these companies said that they were increasing capital expenditures into Q4 and all throughout 2025 because they do not have enough processing power for their data centers. What does that mean for NVIDIA? Just backlogs and backlogs and backlogs of new orders. So it should be pretty good for NVIDIA. We'll see how their earnings are. But the problem with NVIDIA is that they've set the bar so high, right? So now they have to constantly beat the already very high bar. So we'll see how the market, I'm expecting good numbers, but the market's reaction to them, that's anybody's guess. So we'll keep a closer eye on NVIDIA and their direction that they take prior to earnings. Now, moving into Tesla, 5.77% to the downside. So we know that also this was a big bull trap, guys. I mean, buying into 80 RSI on the daily, buying into extremely high RSIs on the hourly. I mean, it could look like an alluring prospect. You could be getting FOMO, guys, but it always usually ends up in a sizable pullback and shakes a bunch of people out. That being said, who's in control right here? The bulls are in massive control, looking for the daily higher low, anything above 240, just for a daily higher low for possible other leg attempt to come back to the 350 area. Where are we kind of finding support in? Well, you can see it best on the weekly, the 310 down to about 300, right? Well, it's actually wider. 310 down to about 290 is the actual range. It's been acting as a key contested zone and is a big psychological level. So the Bulls have their work cut out for them in terms of playing defense because we're coming into the area hot, 5.77%. They're still looking healthy, but we do still need a little bit more consolidation, in my opinion. One of the big reasons for the drop here today, guys, was this headline right here. Trump likely to eliminate EV credits. Tesla loses its $1 trillion status. So Tesla came out and actually said that they were all for this. They are for the elimination of EV credits. I'll remind you, that's the $7,500 credit that you receive as a consumer when you buy an electric vehicle, right? Why does Tesla not mind? Why are they all for it, guys? Well, Elon, once again, playing 4D chess. Elon can very easily drop the price of his cars by $7,500 and just not get any credits or not give any credits to consumers, right? He can drop the price of his cars by $7,500. They have the pricing power to do it. They have the net margins to do it. They have the free cash flow to do it. Who cannot afford to do that? Well, all the legacy automakers that still have not produced 5 years into this narrative, still have not produced any EVs at a net positive profit margin. None of them, not Volkswagen, not Mercedes, not BMW, not Ford, not GM. None of them have produced EVs with positive net margins. So this is 4D chess by Elon, once again saying, I will price you guys out of the entire game. Go back to making your hybrid cars. In other words, is what Elon's saying. So 4D chess by Elon, like it or not, I'm just here to report the headlines and my interpretation of them. That being said, if Tesla falls a little bit more aggressively as well, we do get hourly oversold conditions, which are close to, I'll be looking to write some short puts, possibly down here, 290 down to about 275 is a juicy location for some great premium. By the time we come down there, we'll be probably oversold, taking back a lot of the move, could get some reaction down there for a little bit of a bounce. So that's why I'm looking to play it in the short term near future. Moving on to Palantir now. So Palantir also down about 2.5%. Not that bad, right? But Palantir, we are expecting some form of a pullback. So it's normal. SPY, QQQ, and the entire market pulling back as a whole, right? So, Palantir sometimes can just do wonders on its own, but not this time, unfortunately. The RSI is kind of catching up with it on a daily basis, very extended there. The weekly RSI as well, very extended at 85. So, I'm not opposed to buying more Palantir, but I'm not doing it here. If we get a nice pullback, though, either daily, pull back into the 55 range where the 12 EMA is, Palantir does this all the time. They always pull back and touch the 12 EMA. So it shouldn't be any surprise that they're trying to make an attempt to do it right now. In the event they pull back too much and roll over to daily downtrend, is the story over for Palantir? Not really. Look at the weekly, guys. Who controls this weekly, right? Beautiful weekly uptrend, just looking for a weekly higher low for further trend continuation. And if Palantir has to consolidate for a few weeks on end, grow into its new pricing, allow these moving averages to catch up, allow the RSIs to cool off, no problem at all. NVIDIA has done that tons of times, and you see that NVIDIA always manages to go higher after. So I am interested in Palantir, but I need to see lower. I'll tell you guys when we get closer to my levels how I plan to play it. And that's pretty much everything for our today's video. If you notice, everything is all the growth names, guys, right? Bull traps at the top and pull back. SoFi, I love SoFi as a company, don't get me wrong, but due for a little bit of a pullback, right? On all these names that have run a lot, due for a little bit of a pullback. SoFi, I like it more in the $12, $11 range. So if we somehow come back here, I'll be looking to play it as well. Coinbase, a lot of the brokers, right? Blasting off the tops, now coming back, retesting these ranges of resistance, right? So all the hype plays are kind of coming back, which is why I'm interested in playing these pullbacks on IWM and possibly even ARKK. So I'll be keeping a close eye on those, but you guys know me. I gave you guys a bunch of plays the other day. Airbnb, not looking too bad in these levels to build a little bit of a position for some upside runs. Uber, also not a bad proposition. They had tremendous earnings, cheap valuation right now. The growth is there for the company. Just sideways consolidation, give back, overall market weakness. But I would not be surprised, if we can keep finding this stock, writing puts in the 70 to 65 region. I think this is easy money, guys, because there's no doubt in my mind that Uber should probably be at least an 80, 90, maybe even $100 company into 2025 at their current growth rates. So there's tons of opportunities in the market right now. Just need to know where to look, right? UPS, Another great opportunity to be writing some short puts. Coca-Cola, another company we looked into, daily oversold. I mean, Coca-Cola has been daily oversold for the last 2 weeks of time. Find me a time frame where Coca-Cola has been oversold for more than 2 weeks. You'd have to go back to the depths of last fall when the entire market was panicking due to inflation concerns. Or you'd have to go back to the peak bear market in 2022, same period in fall, or you'd have to go back to COVID. Now, Coca-Cola is faring a lot better than they were back then, so I am buying these dips aggressively on Coca-Cola, looking pretty good. So there's tons of opportunities to be had in the market, guys. Just need to know where to look. So that's everything for me today. Went a little bit more than I wanted to, but then again, we did have Disney earnings, but I kept it under an hour. So moving forward, guys, we'll probably try to keep it as much as possible towards 30, 40 minutes. I'll try to do my best to still convey a lot of information quickly and in an efficient manner and not leave out the context of what I'm saying, right? So that being said, guys, thanks for watching the video. Hope you had some fun. If you did, drop a like, would appreciate it for the growth of the channel. If you're new, consider subscribing to the channel too. We do these every Monday to Friday after the close. Hope to see you back soon. And lastly, if you have any questions at all, please feel free to reach out in the comments. And you guys know I always usually get back to you in the next 24 hours. And lastly, if you want to join the Discord, guys, and get access to all my trades, all of these trades in real time, the private morning live streams, and talk to me all throughout the day, more details down below in the description. Looking forward to seeing you in there. Take care, guys. See you tomorrow after the close. Peace.